FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome and happy Monday. You are listening to the Financial Survival Network. It is March 9th, 2016. That means officially QE starts in the European Union. The ECB, Mario Draghi, supposedly is starting it now. And it corresponds perfectly because daylight savings time started yesterday in the United States. 2 futile and pointless endeavors that accomplish absolutely nothing, although it does stay lighter out a little bit later in the United States. So maybe there is a point to it all. Maybe it'll stay lighter out a little later for the euro as well. But here to talk about it is John Rubino of dollarcollapse.com and co-author of The Money Bubble, along with our good friend James Turk. John, how are you?
I'm all right, Kerry. How are you?
Good. So wrote an interesting article about that Austrian Bank Heta. It's being allowed to basically collapse upon itself like a black hole that it is, like the banking system is. And you'd think instability, rising precious metal prices, all sorts of things like that. And yet, it seems to be a big yawn taking place across trading desks around the globe.
Yeah, this is one of those things that seems small. You know, it's an obscure bank in an obscure country, but it has the potential to snowball into something a lot bigger, because this is the first time that the central part of Europe has tried the whole bail-in thing. And what that is instead of just using taxpayer money to recapitalize a bank that gets into trouble, they're now insisting that the bondholders of the bank, this bank called Heta in Austria, take big haircuts. In other words, the stakeholders in the bank are going to suffer now instead of just taxpayers having to bail the bank out. And the reason for this is that the bank bailouts of the last 5 or 6 years have led to big increases in government debt, huge increases in money printing, and didn't actually help Main Street at all. It just helped the bankers maintain their year-end bonuses. At least that's the perception. So it's a political non-starter now to come in and just bail out banks with taxpayer money. So they're trying something new. But the consequences of what they're trying now are unpredictable, because making bondholders take a hit on these banks. The bondholders are largely other financial institutions, including other banks, which means these other banks then have to report big losses. And at the same time, a lot of the debt of this bank was guaranteed by the province, which is like a state in Austria called Carinthia, that is now on the hook for 10 or so billion euros, which doesn't sound like that big of a deal, but it's a lot of money for Carinthia, and it would bankrupt it if it's actually forced to make good on these debts. So you have the potential for a bankrupt state within one of the previously thought to be very solid countries in Europe. You know, Austria was a AAA rated credit until just lately. And now one of its states is potentially junk credit, potentially bankrupt. And a lot of other banks in Germany and Austria are having to take big losses because of this one bank going bust. So this has the potential to scare people and to cause everyone to look at the finances of the actual banks themselves in Europe, rather than just assuming there's a government backstop for all of it, and that the European Central Bank will step in and bail everybody out for any kind of mistake, which means everybody's a AAA credit in that case, right? You can lend money to any bank in Europe without worry, knowing that the central bank is going to take care of whatever trouble they get into. Well, if that's not the case, if these banks are actually going to be allowed to go bust, and the bondholders are going to be on the hook for whatever the change in the value of those bonds turns out to be, then all of a sudden you have to look at the individual banks and assume that their credit rating, their stability, is the real deal, that there isn't any kind of a backstop anymore. And when you do that, that the, in effect, de facto credit ratings of these institutions fall to their intrinsic value, and which is very low in a lot of cases. A lot of these guys are basically junk credits without a government backstop. And so if that happens, then you got the potential for a financial crisis where everybody has to revalue everything. Who in their right mind would lend money to an Italian bank at these interest rates if it wasn't actually backed up by Germany? If those bonds, the Italian bonds, weren't actually German bonds, nobody in their right mind would want to own them. So that's the process that Europe is going through right now. And if it starts to spread, if the idea starts to spread that these banks are really on their own and we have to judge them based on their own merits, then there's a real potential for financial contagion, which, of course, will cause the European governments to go back to the old bail out strategy. I'm just using taxpayer money and government bonds. It's borrowing lots of money or creating it out of thin air and using it to recapitalize banks, which is politically disruptive and eventually incredibly inflationary. So, they'll go back to that, and then we'll get a disruption in the currency market. So there's no easy way out of this. But things like this, things like Heta Bank, are interesting because they expose the contradictions in our current financial system. We can't go on as we are, and we can't seem to find any other strategy for allowing this to continue much longer. And so at some point, it's got to blow up. And this is the kind of thing that when it starts to blow up, this is how it'll look. Some small thing that happens, but then it has aftershocks, it has reverberations throughout the market, which turn it into a big thing. And so we'll see if this is it, or if something else turns out to be the catalyst for our reevaluation of the current system. But something is coming.
Yeah, this is potentially very, very bad because effectively what they're telling you is, sorry, no more free lunches. You're on your own. And in Europe, John, correct me if I'm wrong, there is no depositor insurance, right? There's no insurance for depositors. There's guarantees, I think, in certain countries, but I don't think they have deposit insurance in the EU, do they?
Well, I think they have variations of it. And so far, no depositors have gotten wiped out in European banks because, first of all, because there are various kinds of deposit insurance in different countries. It's a patchwork, unlike the U.S., where we have an across-the-board $100,000 insurance policy from the U.S. government. But more importantly, the banks haven't been allowed to go bust, so it hasn't been tested. And that would be the question: if as part of the bail-in process, they start to go after depositors, then you've got a really interesting situation where you're getting either next to nothing or less than nothing on your bank deposit, right? Because in several European countries, and it's spreading, bank deposits have negative yields or zero yields. And not only don't you get anything, but you are now an unsecured creditor of the bank and could end up losing part of your deposit. And so under those circumstances, why in the world would you put money in a bank? And so that's another potential risk here, is that we lose faith in the banking system, or Europeans do. And they look to other places to put their capital. And so the banking system becomes starved for deposits and has to go back to the government and ask the central bank for even more reserves. And based on that, things spin out of control. So you can sketch out a scenario where many small things turn into something that leads to the system spinning out of control. And this is one of them, and it bears watching. But as you said, at the same time, the Eurozone started QE today. So they're in the market actively buying back the bonds of pretty much everybody in sight right now. And that's having a very positive impact on the bond markets and on the stock market in the U.S. The U.S. stocks are up after being down hard on Friday. And a big part of that is global liquidity. The central banks of the world are mostly, with the only exception being the U.S., and I don't know how long that'll last. Most central banks are pumping out huge amounts of newly created currency, and it has to go somewhere. So it's going into financial instruments. It's pushing down interest rates around the world, and it's pushing up stock prices. And so basically, what we're doing is a vast debt for equity swap out there, where we're buying back debt and using that money to bid up equity prices. And so this is, again, unprecedented. It's uncharted territory. And on the one hand, it's very inflationary. On the other hand, all of this debt that is going bad and or being bought back, that's deflationary. So you got these huge forces contending out there in ways that have never been seen before. And it's impossible to predict how it plays out in the short run. But I think in the long run, because this process is being used to allow basically everybody in the world to take on more and more debt, we're creating the conditions for it to blow up. But, as we talk about every time, Kerry, there's no way to know about the timing of any of this because we've never been here before. We've never had all these central banks doing stuff like this. And so you can point to so many things that are problematic. And then at the same time, you have to point to all this new liquidity flowing into the market. And another thing that has been happening lately is, of course, oil prices falling with all the reverberations throughout the U.S. oil patch and the junk bonds related to, drill new age fracking companies and everything. And while this is going on, you've got oil inventories soaring in the U.S. In other words, we're using up our storage space for oil because we're continuing to accumulate oil that the market isn't buying right now. And so that's an imbalance that's building up. And also something that, should oil prices reach a point in the supply-demand calculus where they fall again hard, what does that do? We don't know. We know it will affect some parts of the economy negatively and some parts positively, but it's completely possible that the negative outweighs the positive, at least in the short run. And then you get another, crisis that the governments have to start bailing people out from. So I don't know.
It's going to get interesting.
You can continue to go through the system and find problem after problem.
Well,
and then the solution seems to be easy money for everything. And that's basically the state of the world right now.
It's going to get interesting. And in fact, Austria has no deposit insurance whatsoever. I researched it. But the other countries in the EU, most of them do. Hey, talk more about this up next on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And if you just joined us, John Rubino is with us. It's Monday, March 9th. Daylight savings time is in full swing now. So if your day seems longer, it really isn't. It's all an illusion, just like QE taking place in the EU right now. But John, so look, in a world where there's no fractional reserve banking, you don't need deposit insurance because you basically have a bank with its own capital on the line. They're not creating dollars or euros or renminbi or yen or name your currency unit out of thin air. Even if it is a fiat-based currency, at least they've got a high reserve. And I look at banks in like Belize, they've got a 25% reserve requirement. when they make a mortgage, they only make a 50% mortgage. They don't do 80% or 90%, and they're not creating, there's no credit creation. If you're interested in finding out more about fractional reserve banking, go to Mises.org. There's expositions on it. Fractional reserve banking is much of the root of the evil that is taking place in the country, in the world. Without fractional reserve banking, you couldn't finance the deficits, which is really a lot of the root of the evil taking place. You couldn't have these bankrupt pension funds, John. So much of what's happening, they couldn't be buying government debt like it really was worth something. I mean, government debt is just an oxymoron as being an asset, somebody's asset. Well, if there's an emergency in a country and they need to issue debt, that's one thing, and you could tightly define emergencies, but somehow emergencies become permanent with governments, and then they're always issuing debt. It reminds me of when they built bridges and tunnels in New York City and state. You had this Triborough Bridge and Tunnel Authority, and it was only supposed to exist to pay off the bonds. And then wise man Robert Moses figured out that, hey, we could exist forever as long as there's one bond outstanding that needs to be paid off. The authority, the Triborough Bridge and Tunnel Authority, later on to be called the MTA, Metropolitan Transportation Authority, as long as there's one bond that needs to be paid off, we have the right to exist. And it became a perpetual bonding authority. And that's what we have around the world. We have a perpetual state of emergency, whether it's for the TSA. Every government program exists because there's a perpetual state of emergency, John, right?
Well, yeah, that is the case now, Kerry. And basically, via fractional reserve banking and fiat currency, we've created a world where debt is a way of life. And basically, every major institution at the government level and most individuals have too much debt. And so, as you said, we're always on the edge of a catastrophe because we owe so much money that in any kind of a crisis, we can't pay our debts. And so we've reached the point where it's one crisis after another, and then one response to that crisis after another, and the response is always easier money and more debt. So you look at basically any chart of debt, whether it's global or for any major country or most subunits within governments, within countries, debt is continuing to increase.
Yeah,
and that's a logical conclusion to a fractional reserve fiat currency system. It's based on debt, and it can only run with increasing amounts of debt year after year, which is basically the definition of a Ponzi scheme. And we're at the very, very end of the Ponzi process now, where it's inflate or die for almost every major country. And for most families and most state governments, as we're finding out in Austria right now, and if you look up unfunded liabilities in the U.S., you see that most state and local pension systems are deeply in the red. And in other words, they owe more than they can ever hope to pay off. So it's everywhere. Yeah. And so what that leads to is crises bubbling up kind of unexpectedly everywhere, and at one time or another, and then everybody having to respond to it by creating more currency. So this can't go on. It's a system that is guaranteed to blow up. And then once it does, then the conversation becomes, what do we put in its place? And hopefully the 100% reserve banking and sound money argument will win out in the end, but you never know. You don't know what we'll end up with. But
no one wants to ever do that. That's no fun.
Yeah, that requires self-control and prioritization and stuff, and
grown up.
That's, we're an entire generation of people who've grown up without having to do that. In our lifetimes, baby boomers, we've never been in a situation where, at the governmental level at least, we have to prioritize and we have to say no to one thing in order to have something else. That's just not how it works. But that is how life works. So you could say that the current situation is extremely unnatural because it's relying on this illusion of unlimited wealth generated by an electronic printing press. You just create these electronic impulses or pieces of paper and dictate that they have value. And as long as people buy into the illusion, we can create fictitious wealth such that it allows the system to continue to operate. But as soon as that wealth is seen as fictitious, as soon as we don't buy into the illusion that these electronic impulses that are being created at an accelerating rate around the world actually have some kind of value or represent something real in the world, then everything falls apart. And that's clearly what's coming. But, they've been able to keep it going so much longer than they should have been able to. If you look at the numbers right now and you look at debt levels as a percent of GDP, it's totally unprecedented. It dwarfs 1929, for instance, before the last big crash. And that implies that the coming crash is going to be commensurately bigger and probably of a different nature, because our response to it with, when we're still armed with unlimited printing presses, is going to be something more Weimar Germany-ish than FDR-ish. It's going to be something that isn't historically, it isn't something that the U.S. has seen before. It isn't something that we've tried in living memory. So it's going to be very, very different and very surprising, however it plays out. Yes,
you are correct on that. It's going to be one for the ages, John. Right?
Yeah. When though, Kerry? When is it going to happen? That's the question.
Well, we know in Austrian economics never to address that because, look, truth is stranger than fiction, as Mark Twain said. Fiction is limited by the imagination, and truth is not. And as long as that's the case, then forget it. We just really can't imagine what can happen here because it hasn't happened before, and it's just going to be the mother of all blow-ups here. That much we do know, John. Anyway, John, I think that's it for today, but find John's work over at dollarcollapse.com. Compelling, always thought-provoking, and gets you thinking along the right way. It's just so important that you really think at this point in your life, at this point in the economic cycle, because no one knows what's going to happen and when it's going to happen, but you know that it will happen. So it's just so important to start thinking. And as always, you'll find the link to John's site and his book on financialsurvivalnetwork.com. Don't forget, sign up on our mailing list. We got a webinar or two coming up in the next month that you're not going to want to miss. Really important times. I don't want to say end times, not into the biblical prophecies and all that, but who the heck knows? Certainly nobody really knows what's going to happen next, but everybody should be formulating your own hypothesis and your own theories as far as what's up next. And John, we'll talk to you next week. Be well.
Okay, Kerry, you too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.